Hello friends, this is Jimmy Singh, broker owner of Supermax Realty, 647-961-2639, or you can reach me at my website www.supermaxrealty.ca. So friends, in this video, I would like to discuss about the fall real estate market outlook for our Greater Toronto area, Golden Horseshoe and London. So as we all know, Canadian real estate is one of the biggest drivers of our economy, and approximately 10 to 12% of our GDP depends on real estate and construction related activities. And policymakers are doing their best and going for great lengths to support our economy with different stimulus packages and providing liquidity for various businesses and families who need the most. So first thing is why our market is so strong. So the number one reason is our government is doing their bit and supporting us financially. All second thing is they're making sure the interest rate is less, so people can still borrow and then put the money in their businesses or pump money into economy. Third thing is economy recovery. So we are seeing sudden recovery in our job creations and different industries hiring. So economy recovery is doing pretty good. Fourth thing is limited supply. So because of the lack of good saleable listings in the marketplace all across Golden Horseshoe, Greater Toronto area, it is putting a lot of pressure on the buyers to make a quick decision, and the prices keep going up. And recently a survey done across Canada showed 56% Canadians feel confident about real estate market and would most likely to buy or sell even if the second wave of COVID happens. So what are the risks? The number one risk is government support ending. So if government suddenly stop all the deferral programs, the SERB and all the liquidity in the market, that is the biggest risk. Second is if the immigration doesn't pick up. So approximately, friends, 350,000 immigrants come to Canada, and approximately 150,000 people land in Greater Toronto area and they seek new housing. And our builders can't keep up with the pent up demand because Greater Toronto area, there's a Greenbelt legislation which hampers the builders to acquire land at reasonable prices. Plus there's a lot of red tapeism, and municipalities are putting a lot of taxes and levies on the developers, so they start now going vertical instead of horizontal housing, which is low rise housing. And this has created kind of spillover from Toronto to secondary markets like Hamilton, Niagara Falls, Brantford, Kitchener, Durham region, and London areas, even as far as Windsor. And second risk is obviously mortgage deferral programs. So right now in Ontario, 10% of the homeowners have deferred their mortgage payments. So recent consensus says little bit more than 5 million people in Ontario own their homes, and 69% people, between 65 to 69% people still have mortgages on the properties. And out of those, Scotia said 40% equity is there on those homeowners who have deferred their program. So the risk is very, very less. If people have substantial equity, let's say 40% in their house, worst case scenario, if they can't find a job, they will sell it or they can refinance whatever extra unsecured debts they have, and we'll be fine. Because what happened is we are already anemic, or the supply of the detached or low rise is already short all across the board anywhere in Greater Toronto area or Golden Horseshoe. So even if the people with 5% down or very minimal equity, they start flooding the market with the inventory, I feel that is going to be absorbed with so much bullishness and so much buyers out there. The only weakness I see is in the condo market in Toronto. So you can watch my previous videos where I went in detail about that. Third thing is household debt. That is the biggest risk, and that is something we have to keep a tab on it. And last one is the unemployment. So right now, in last video, I talk about that job creation last month were close to 140,000 full-time in Ontario. So we are doing fine. And the biggest enemy, friends, I see is inflation. So what is inflation? So inflation, friends, is the erosion of your purchasing power, buying power over the time. So it often occurs when the economy is struggling and is in turmoil. So how government control is just adjusting or controlling the supply of money. So value of money goes down. And as I said, in March, April, if you go grocery, you have seen certain price items. If they are $1, right now they're selling at $1.29, $1.30. It means those are now more. You need to pay more money to have the same stuff couple of months ago, right? So that is number one concern. And if we study historically Canadian economy, we in 1980s, 70s, the inflation was rising, and at the peak in 1991, inflation in Canada was 5.63%. Right now is hovering less than 2%, right? So investors that time, they just want to beat inflation, so they are investing in assets like real estate, and then basically they are negotiating their contracts with the company to index their inflation index contracts. So to make sure the companies are every year increasing their wages to keep at par or above the inflation. Not sure how the companies are negotiating contract these days, but that is something you have to keep in mind, because if consumer expect more inflation, they buy more now to avoid paying higher price later. So excess of that demand increase the inflation, and it results in kind of a stockpiling, what we have seen at the beginning, what we have seen in the beginning of COVID-19, when people start suddenly stockpiling toilet papers and hand sanitizers, and because of the lack of the supply, suddenly inflation is created, hyperinflation is created, and prices skyrocket. Same thing. But I think the food and shelter are basic human necessities. This is the reason in this pandemic I'm seeing people going out by their house. They are not spending much on other things, but they are spending money on eating and their shelter, which is their housing, because they feel like if they don't enter the housing market now, in future they won't be able to afford it. And the biggest concern I see for millennials or first-time buyers, because their incomes are not increasing directly proportional to the housing rise. And if the average house prices are in 6.5 in last 20-30 years, their incomes haven't caught up to that, and they're struggling, and eventually they will be permanent tenants. So that is one concern I have. And lastly, I personally believe in investing in assets, to earn more than inflation. And obviously, putting money in the bank not is the wisest idea, because no one get rich by saving money in the bank. So you have to buy asset. I'm not saying everybody should invest in real estate, but I personally believe in real estate. Some people do buy gold, some people invest in stock market. So everybody has different risk tolerance, but you have to keep on top of inflation so the buying power of your money is not eroded. Third point is, what is different brokerages top, Remax, Royal LePage, and all those things, all those big brokerages, and CMHC is thinking about rest of the year and fall market. So friends, as you all know, earlier in the second quarter, CMHC says our market is going to crash 3 to 18%. Obviously, that never happened. So if you check my old videos in April, May, June, I was telling everybody market is not going to crash, because I'm there with buyers and sellers every day. I know exactly how they feel about that, right? Same with the buyers, banks. They are giving different number, 3% to 8% depreciation or fall of the market, which obviously never happened. And a recent report with Royal LePage says for the rest of the year, we will see a growth of 3%. Remax is a little more bullish about that. And they did some survey across all the country and said 32% Canadians no longer wanted to live in the urban centers and cities and want to move to suburbs and rural areas. And they said 44% of the home buyers would like to own more space, yard, and some kind of home working environment and swimming pool. And coming to the numbers, they are predicting London for the rest of the year will grow 5% because the inventory is very tight and there's a big competition among first-time buyers and investors in the starter and mid-tier home market. Brampton Mississauga, again they're predicting 5% growth for the rest of the year. Toronto, again 5% growth for the next of the year. We are sitting in September, so we have October, November, December. So for the next 3 months, they're predicting 5% growth. Niagara, they're predicting between 4 and 6% growth for the rest of the year because a lot of people are buying recreation properties and luxury home there. Hamilton, Burlington, they're predicting 3 to 4% growth. They see spillover from Toronto and Peel area, Brampton, Mississauga for the buyers. Durham region, they're very bullish on Durham region. There's tremendous opportunity and growth, 14% their prediction for the rest of the year. They feel because of the 407 expansion, new malls, growing university and vicinity to Toronto is driving the demand in East End. And for Muskoka, Peterborough, Quathras, those rural recreation properties, they are seeing a high demand and growth of 9%. And for Kitchener-Waterloo, they're predicting 3% growth. The reason being is there's a risk or little bit for Canadian dollars because a lot of US companies are based in Technology Triangle, Kitchener-Waterloo area, and they operate from there. So in case those companies go back to US, there's certain risk, question mark. And obviously it depends on US elections, who's going to be elected. Is it Donald Trump or somebody else? So that is something we have to keep in mind. But certainly a big shift for work-life dynamic is making people go away from big centers to small cities. And friends, in 2016 and 17, when the market was crazy, there was irrational exuberance. Same thing, I'm noticing in some of the markets. But when they put CMHC put a stress test in 2018, market suddenly have a soft landing or a correction. And 2019 started a weak. In second, third quarter, it picked up going into 2020. And now I'm seeing tremendous demand all across, less inventory, interest is very cheap, and buyer can buy a bigger house versus 2 years ago. And other trends I'm noticing is obviously because of the lack of the supply, what we call green belt legislation, a lot of people are moving out to afford bigger houses versus a micro condos living in Toronto. And millennials are selling their condos and try to raise their family and provide what their parents have given it to them. That is a big backyard and better quality of life. So they're moving as far as London. They are moving to Kitchener-Waterloo. They are going to Wasaga, Collingwood. They are everywhere. Depending what your job flexibility you have. Even Niagara Falls is booming as well, right? And as far as the baby boomers, so kids living with them, they're moving out from their parents' houses, buying their own properties or renting. And initially there was thought that when baby boomers downsize from bigger houses, there's going to be a lot of inventory or influx on the market for listings. But that never happened because people see their house values goes up, they're holding on to it. Some are refinancing, buy investment property for the kids, rest are just keeping for the retirement. So those influx of homes never happen. Same thing in future. A lot of people are saying after deferral program finishes, people who are under stress, they're going to put their house on the market. That's fine if we have 5 million people and maybe 200-300 people put on the market their houses, but they will be absorbed because detached houses are in great demand. So if detached townhouses come, it will be absorbed because builders can't produce that much housing in a year. So that is the second trend. And mortgage deferral right now is 10% in Ontario, so we are doing fine. So if I look at Saskatchewan, they are doing 14.8% deferral, and the highest in Canada is Alberta, where 21% homeowners are deferring their payments. So that is a trend I have to watch for. But as I said, right now default rate in Canada or in actually Ontario is very, very low. So in last video, I talk about the default rate in Ontario. We are historically low. So overall, I'm bullish, but I'm a little cautious at the same time. I will because this situation is evolving and we have yet to see what the next months bring. And obviously 2020 is a big question mark. So we have to see what policy changes or how the economy does. And in the meantime, if you have any real estate related question anywhere from GTA, Golden Horseshoe, you're most welcome to reach me at 647-961-2639, or you can subscribe my YouTube channel, Real Estate Edge with Jimmy Singh. Or if you are a home buyer or seller or investor looking to buy anything in GTA and want a free market evaluation, give Supermax team a call, or you can visit my website for a free market evaluation, www.supermaxrealty.ca. Currently, we are working on a couple of projects in Niagara Belt, Wellington and Thorold, brand new pre-construction closing in 2021, 2022. So if you are an investor looking in that pocket or London area, which is growing tremendously, give our team a call. Thanks for watching. God bless you.